Hello and welcome to my YouTube channel. Today we are here to discuss about those sections apart from ATC that helps an individual to save taxes. Let's discuss them one by one. The first savings option apart from ATC is savings under the National Pension Scheme. One can claim an additional deduction of 50,000 every year by contributing to the National Pension Scheme account or the NPS. That means if you are under the tax saving bracket of 30%, you are paying taxes at 30%, your savings can be around 15,600 rupees, including cess. The other option is section 80D. 80D section deals with payment of health insurance premium for self, spouse, kids, and senior citizens. If you are covering yourself, your spouse, and kids, then your tax deduction would be 25,000. If you are covering your spouse, kids, and your parents who are senior citizens, then the maximum tax deduction is 50,000 rupees. However, if your parents are not senior citizens, then your taxable limit is restricted to 25,000 rupees. This apart, you can claim an additional deduction of 5,000 rupees for payment towards preventive health checkup. This deduction can be availed for self, spouse, kids, and parents, and this payment can also be made in cash. The next section that we are going to discuss is section 80DD. This section is for those taxpayers who have disabled dependents. Deduction can be claimed under 80DD. 80DD defines disabled dependents as disabled dependents here can be spouse, children, parents, or siblings. So this deduction depends upon the degree of disability. That is, if the person has a disability or a severe disability. The taxpayer can claim a deduction of 75,000 a financial year if the dependent has 40% of any disability. And if there is a severe disability, then the taxpayer can claim a deduction of 1.25 lakhs. However, the dependent should have 80% of any specified disability, which is a severe disability. Tax savings under section 80DDP. This is for those taxpayers who are suffering from diseases like cancer, AIDS, or neurological diseases, which entitle them to expensive treatment costs. They can avail this deduction under section 80DDP. Deduction is rupees 40,000 or actual amount paid, whichever is lower. However, this limit goes up to 1 lakh in case the taxpayer is a senior citizen. Tax savings under section 80E. 80E can be availed in case the assessee has taken an education loan. If an education loan has been availed, the interest paid on such loan can be availed as a deduction under section 80E. Tax deduction can be availed by the parent or the child, whoever is repaying the loan. This deduction can be availed from the date they start paying the interest on education loan and in immediately 7 succeeding financial years, or until the loan is fully repaid, whichever is earlier. So in any case, 80E cannot be claimed for more than 7 years. There's no limit for deduction claimed for interest repayments. The next section is section 80EE. This was introduced in the financial year 1617 for claiming deduction on repayment of housing loan over and above 2 lakhs, which has been currently given under Section 24 of the Income Tax Act. The conditions are the buyer should be a first-time buyer, that is, he should be buying the first house. He can claim an additional deduction of 50,000, and eligibility to avail this deduction includes that the value of the house should be less than 50 lakhs and the loan should be rupees 35 lakhs or less. So, in case you are a first time buyer, you can claim a deduction of 50,000, sorry. And in case your value of the property which you are buying is less than 50 lakhs and the loan which you have taken from the bank is 35 lakhs or less, then you can claim a deduction under Section 80W. 80GG. 80GG is generally for those people who do not receive HRA. They can claim deduction towards rent paid under Section 80GG, which is up to 60,000 rupees in a financial year. This deduction is not available to those taxpayers who own a house but live in a rented house in the same city. However, it can be availed by assessee who own a house in another city and claim deduction under Section 24 towards repayment of home loan on those houses. That is, if you are living in some another house and you are claiming deduction under Section 24 towards repayment of housing loan, still you cannot claim this deduction. So this deduction is basically only for those people who are staying in rented houses. Tax savings under Section 24. The maximum tax deduction for payment of home loan taken for self-occupied property is 2 lakhs. In case the property is not self-occupied and is rented or deemed to be rented, no maximum limit for tax deduction has been prescribed. However, if a borrower is not able to occupy the house property due to employment or due to the fact that he's carrying out his business or profession in some other place, then the amount of tax deduction available under Section 24 has been restricted to 2 lakhs. Tax savings under Section 80 TTA and TTB. Section 80 TTA deals with deductions up to 10,000 on income earned from interest under savings made in banks, cooperative society, or post office. There is no interest on income earned from FDs and RDs. TTD deals with deduction up to 50,000 for senior citizens or interest income from deposits in banks, post office schemes. Tax savings under Section 80G. If you make tax deduction to any charitable institutions, then you can claim tax deduction under Section 80. However, cash deduction of above 2,000 rupees do not qualify for deduction under this section. Depending on the institution, the tax deduction have been restricted. There are 4 kinds of institutions under Section 18. Certain charitable institution get 100% deduction. That is, if you pay rupees 100, entire 100% will be allowed as a deduction while computing your taxes. Second category is you pay rupees 100 and only 50 rupees is allowed as a deduction. Third category of charitable institutions are you pay rupees 100, then rupees 100 or maximum of 10% of adjustable gross total income of the taxpayer shall be allowed as a deduction. There are the fourth category of charitable institutions are if you pay rupees 100, then rupees 50 or maximum of 10% of adjusted gross total income of the taxpayer shall be allowed as a deduction. Considering there are 4 categories, one needs to be very careful in selecting the charitable institution to whom you want to make a deduction. Hope this video was of some use to you. Do like my content and subscribe to my channel for more tips on taxation, GST, and business. I'll get back to you with another exciting topic. Thank you.